Noon. Welcome back to another episode of Finance Agents Live. Today is show number 23, I believe. 23. Episode 2 of the How to Own a Successful Funding Business series, where we are talking about all the different primary components of what it means to be a member office with us. A member office is what we call the funding companies that we support using our sales system support technology products, all the stuff that we're talking about in this series. Today's episode is episode number 2, where we go into the products or programs, the funding programs. These are the things that our offices sell. And you got 10 years of experience and trial and effort and errors and mistakes and fundings and over $1 billion in funding, so success, but a lot of everything else that has gone into coming up with this product mix. So we'll be talking about this together today. Trey's on the show. Thanks for being here.
My pleasure. So for many years, we had only one product. Right. So
one trick wonder.
Yep. Worked really hard on diversifying the products, the solutions for the client. And so having a diverse portfolio of programs is just a necessity. If you're going to survive, if you're going to be, if you're going to thrive in our industry, there's going to be low points, high points. Want to be consistent.
And we have a quote on here. I don't know if you could see it, but it's from Seth Godin, who's one of the masters of marketing. And his quote is, "Don't find customers for your product, find products for your customers." And that's exactly what we did. We started with one product, and we had all these customers coming through. And unfortunately, we had to say no to way too many people. And by the way, that's the way most funding companies work. It's sort of like the secret of the industry. Almost every funding company out there really just sells one product. They may have a list of, I love it when I see guys with a list of like 80 funding programs on their website. Yeah, once you see the church financing on there, you know it's all fake. And really they do like one or two things. As most people do one thing. So it was way more difficult than I expected it to be to diversify our product mix for a lot of reasons. But we have successfully done that. So let's go over our current product mix right now. We have 6 core funding programs, non-funding programs, and other ones are in development.
Sure. Number one's our unsecured business finance program. This is our longest running program, like Tim and I were mentioning earlier. This is great for startups. It's thinking outside the box. So it's a FICO-driven program, and so we have a huge amount of experience with this program.
Right.
Our fulfillment teams are the best in the industry. Know what the lenders are looking for. So it's definitely a popular product.
Right. Hundreds of millions of dollars in funding in sometimes I call it the credit card program because, that's what it is. You're getting business and or personal, primarily business credit cards. They don't show up on your personal credit report. It's good for startups. This is what got me in here to begin with. It was like, wow, you guys can get money for startups? That's really interesting because when I went to business school, they never talked about bank funding. It was all equity funding, all from VCs.
What junior college?
What junior college?
What junior college was that?
Flunky VC. Okay. That's what I heard. School of Hard Knocks. Okay. I like that when I see it on somebody's LinkedIn profile. School of Hard Knocks. All right. Pepperdine, by the way. Okay. Yeah. Anyway. So the second product is CRE. That's our commercial real estate program. This is great for distressed borrowers. So basically what we're talking about is private money, real estate loans, people that don't qualify in the normal bank criteria. There's all sorts of reasons for that. Cash flow, credit. Cash flow is one of the big ones people are getting disqualified for right now. And this is a good solution. So it's really good or optimized for distressed borrowers. If you're working with A-paper conforming, people getting a mortgage for themselves, that's not us. We're working with business owners and real estate investors.
And this is our newest product. We launched this in the beginning of 2016.
It's our fastest growing product that we've ever had. So it's exciting and it's making big changes in our business.
Next, we have our business term loan division. This is more of traditional funding. It's a combination of like term loans, lines of credit, SBA. This is for the people who are looking to maybe buy into a franchise or a much higher dollar amount. So we have pretty deep experience, a great team working and providing clarity if it's going to be a proper solution or not. So make sure they got to have good credit, collateral experience, and the time to navigate the waters of the process.
This was a tough program for us to master. I'd like to say we mastered it now, but you're always getting better. It was very complicated. It's taken us years, but this last year, 2017, business term loan funding was up 737% over the prior year. We did more in 2017 than the prior 3 years combined, so I really feel like we've made progress on it. I love it because it's got the lowest rates, longest terms. People love these loans. The next one is RBA, which stands for Revenue Based Advance. And what these are working capital loans based on the revenue of the business. It's really good for people who have revenue but don't qualify for traditional financing. Maybe they have bad personal credit or they have a seasonal business. And we've actually done our own direct lending with working capital loans. And it's a tough industry, but people can get funded when they can't get money anywhere else.
A lot of consultants out there who just dealt with this one particular product.
Right.
And now they're attracted to this because they want to be able to offer, for instance, an SBA, more traditional, have a long-term game plan for their clients. Get the fast money now and then more traditional funding here in 3-4 months down the road. So it gets get worn down dealing with merchant cash advances all the time, and that's the only thing you deal with.
Right, plus that industry is contracting a little bit, so we're picking up a lot of people that used to be making great money and now they're making a lot less. They want to figure out how they can get back to that. All right, next is equipment finance, equipment leases, which is really what it is. And this is the single most diverse program. The smallest fundings we've ever done have been equipment, and then some of the bigger ones. We have a $1 million startup brewery that we're working on right now, and everything in between, trucks, equipment, you name it. It works for the broadest range of scenarios. Business with good revenue, business with bad revenue, owners with good credit, bad credit, you name it, is very versatile. Next.
Yeah, I like to say it's more like an appetizer, so it's a good piece of the puzzle. So
side dish.
Yeah, side dish. Equipment financing along with something else. So then we have our business-directed retirement account program, BDRA. This is a very niche product. This is for people who have retirement assets, like a 401k or IRA, looking to either start or grow their small business. I love the program because there's no bank involvement, there's no credit check, you're in full control of the program. So it's very niche. Oftentimes they will do this program along with the unsecured business finance program.
Right, it's the single best way to finance your business. It's not only the cheapest, it's the opposite of the cheapest. You actually make money off your own investment instead of paying somebody else interest or giving away equity. All right, and last but not least, we have some non-funding programs. This is something we really started to roll out last year, and I see growing a lot this year, and that would be, it says credit repair, but it's credit report correction. It's different from credit repair. We also have merchant processing, the way that businesses can accept credit cards, payroll services, and more. Watch for more ones to launch this year. Every one of the non-funding programs is an exclusive partnership between us and another company. Literally no one else can sell the products of that company unless they're working directly with us, unless you are a member office or an agent working with a member office. And then last but not least, we don't have it on here as well, we do have we have 3 different funding programs that are in development right now. Hopefully by the end of this year, we'll have, I don't know if we're ever going to have more than 6 core funding programs because it's a lot, but we are adding more in some of the holes that are filled in. What are some of the funding stats? This is
some funny stats like UBF, oldest program, sold over 10,000 since 2007. So, for many years we were helping over 100 clients a month for this one particular product.
Right. Per month.
Per month.
All right, so that's UBF CRE. Like we said, it's the fastest growing program. We funded $10.5 million in 2017, and we already have about $10 million in the pipeline, and it's January 16th. So that one's growing very quickly.
For BTL, it's, like Tim mentioned, is expanding, funding up over 737% over the last since 2016.
I stole your thunder. I was pulling out the quote early.
So our division does an amazing job as far as, again, as a member office, it's really kind of, getting their foot in the door, bringing the lead in, consulting with them, and then our division will take it over from there, do all the hard work from the main point. But business term loan, you got to have in place to help develop those really strong referral partnerships.
Yeah, business term loans are great because you're looking at 7% interest on a 20 years, 30-year repayment, so the monthly payments are really low. Now, revenue advance, we already kind of talked about this, that market is shrinking. So like 6 years ago, it was a brand new thing, nobody had ever heard of it. It exploded for about 4 years. Now the big guys are coming in, there's price competition, so it's a little bit harder to compete there, which means some commissions are coming down, which is again why people are coming in order to diversify, but it's still the quickest way to get paid. You could talk to a client on Monday, have them funded on Tuesday or Wednesday, and get paid the next week. It's, in that sense, it's amazing, and you can make up to 10 or 12 points sometimes on a deal.
Equipment finance, again, it's the most stable market. We think it's going to be on the upswing. It's going to be consistently trending in the right direction. So over 1,000 plus funding since 2012. So it's really depends upon what they're going after, as far as a truck or restaurant equipment. But that is the most stable market in today's landscape.
Great. All right. And then BDRA, we talked about that. We've sold well over 1,000 of those. And like I said, we're really just helping people invest in their own business. So we love being a part of that. I see some questions coming in. One from Crystal. On the 401k or the IRA program, do they only get access to what they have in their retirement account, or do they get a loan above and beyond?
No loan. There's no loan in place whatsoever. Again, they're using their own retirement assets. So they're able to avoid their taxable distributions and penalties, but there's no bank involvement, so no loan against the retirement assets they have.
Right, so if you have money, you say you have 100 grand in your retirement account, if it's in your retirement account, it's invested in stocks and markets, in stocks and bonds. It's invested in the market. So instead of investing in the market, you invest in your own business. And then as your business grows, you're earning a return on your own business instead of, giving away money to a lender.
Who can retire on $50,000 or $100,000? So invest it in yourself, and then as your business grows, you replenish it back to be even stronger than before.
Great. All right. So Ron, we got another question from Ron. Following up on Crystal's questions, are there tax benefits for a client using their 401k as opposed to them just using the retirement plan without getting finance agents involved? Yes, there's a huge benefit. The benefit is normally if you pull money out of your 401k, take a disbursement, you're going to be taxed up to 50% of that disbursement. So it's a big hit. This process allows you to pull all the money out. There's no tax penalty at all. You just got to pay the service fee of getting it done. And then on top of having the money, now you actually have a 401k in the business that's a benefit for your employees. So it's a win-win-win.
Very legal process, so we make sure everything's done the right way, so therefore you don't get in trouble with the IRS down the road. That's really important.
Great. And Brett, hello.
Hey, Brett.
I'm glad you like our portfolio. We've worked a lot on it, so we appreciate that. Ron's asking, does equipment financing include commercial trucks?
Absolutely. The bigger, the better.
Yeah, I mean, it's a good question. Equipment financing is one of those industries with 1,000 verticals. Frankly, I don't know how many vertical markets there are, but it's very diverse, right? Some equipment lenders will do long-haul trucks. Some will only do short-haul trucks. So it's a very legitimate question. We're ISOs with about 35 different primary lenders across the country. So there's a lot of diversity across them. Here we get Darren has a question.
Can I get financing for a new Tesla truck?
I mean, that's a great no, I can't help you with that. Maybe I don't think they're actually for sale yet for another few years, but I don't know what's going to go on with that. That's an interesting question, and I'll say why. Because what we're really talking about, let's forget about the fact that it's a Tesla truck. We're talking about brand new equipment that has never been sold before. If you're going to go out and buy something brand new to the market, the Tesla truck being an example of something that's really new, it's actually going to be a little harder to get that financed, I think, because it's so experimental. And these equipment lenders will lend you the money because they know that if you default, they're going to take that thing back and they're going to resell it. But maybe the Tesla truck is who knows? I think it's going to be awesome, but you just never know. So that uncertainty is going to make it a little bit harder to get financed. All right, what do we get? Next, Crystal's asking, why wouldn't they go directly to the company that holds their 401k and do the loan directly? So my understanding of 401k loans, you can get a loan against your 401k, and my understanding is the maximum loan is 50 grand, and I don't remember how long you have to pay it back, but you do have to pay it back. And this is not a loan against your 401k. You might have $500,000 in your 401k, and you can access all of it to fund your business. It's not a loan where you're paying interest to somebody. You are your own investor. So it's very different than getting a loan.
No debt servicing.
Right. No debt servicing at all. I mean, after a few years, you do need to start putting some back into your 401k, but you can do it when it's right for you with no monthly pay. It's really important to start a business. Having that monthly payment sometimes can take you out. Yeah, we got another question from the...
So if you use the business director retirement account, you move the money into your account as a business, does this now make your company look even better than before as far as influx of money without debt servicing?
Sure, yeah. I mean, if you're trying to do a valuation of the business, and before the business has zero money in the account, now it has $500,000 in the account. Just on a cash valuation basis alone, it's got more assets in the business.
It can be satisfy the requirements as far as cash injection if you're going for more traditional funding.
Right. Anyway, we're going to get into BDRA a little bit more as we go into this. One more question, then we'll sort of move on here. Crystal's already asking on the CRE, how high LTV will they go? Another good question. Tell you what, we're going to get to that when we get to the CRE section because we'll get into a little more detail. So UBF, why don't you talk about some of the benefits of of the credit card program.
Sure.
Kind of go over those so people understand.
So when
what it
talking
is.
to someone, you want to understand their scenario. First off, are they a startup or existing business? So again, this program has no time and business requirements. You want to know the funding range. So this is a great program, works from $125,000 and down.
Really a minimum of 20. We're not
Right.
helping people that need less than 20 grand.
20,000 to 125 as a range. The only really requirement is to have two things. One, with one person with good personal credit, and a formed business entity with nothing derogatory in its past.
But you can even file a DBA on your own name, right? So the business requirements are pretty darn low. We really just need somebody with excellent credit, not just good credit, excellent, right? Like what sort of range?
So there's 5 things we look at, or underwriters. Underwriters will look at scores of 680 range and above. 2, they need to have depth and history to their credit profile. This is the most important thing as far as someone being qualified and having great results.
It can't be somebody who came on 6 months ago and just created a credit report. Sometimes you get a fake 700 score.
Right.
Maybe they have credit for the last 20 years, but it's a $200 JCPenney's card.
You need to have cash credit cards like Bank of America, Wells Fargo, Chase. That's what banks are looking at. You can never have a bankruptcy in your credit report. This is unsecured funding. You're not putting any collateral, so having a BK in your past makes lenders nervous about that. So there's no restrictions of funds. It's not something where you have to earmark all the funds of what you're using it for the business. So at the end of the day, we're building a strong business credit profile. A business has a credit profile like we do as individuals. And that's what we're doing here, is building that up to make it more attractive to lenders in the future.
Great. And you have multiple banking relationships, so if you miss payments with one or get into trouble, they can't call all your lines. You still have the other banks you can work with. It's very easy to apply for as well. All we need to see is a credit report. So if you're a member office, you just log into our lead management system, attach a credit report, hit submit. Within a few hours, you get a response, and we say this person qualifies for $50,000 to $75,000 in funding. Sign them up. And that's it. Right?
Credit check total, creditkarma.com,
annual credit report for free.
Experian, very flexible as far as the type of report we'll use for review.
Great, and you make great money. All right. Example, in general, as a member office, you're making around 4 points on the funding. So somebody gets $100,000 in funding, that's a $4,000 commission to you, minus whatever marketing costs, and you're still having a net of maybe $2,500 on one funding. All right, moving on. All right, here's the example that I just mentioned. If you could see it on the screen there. If one client doing 100K, not everybody's going to get 100K. Like I said, it ranges from 20 up to, I think the biggest one I've seen is 150. This is a little bit less than it used to. When I started, the people could get up to 300 grand. It's a little bit different now than it was, but still, we see a lot of these coming through because people don't know where to go for startup funding. So. All right, moving on. The next program we're going to talk about is CRE, which Crystal was asking about. Thanks for your patience. CRE stands for Commercial Real Estate, or really it's private real estate loans. What it is not is real estate loans for owner-occupied properties, right? So we're looking at commercial buildings, strip malls, investment properties. If somebody wants to, buy a bunch of properties and rent them out or rehab them, then this would work for them. The loans range anywhere from 100K up to $5 million. We've seen some outside of that range, but most of the time that's what we're looking at. You cannot be disqualified for having bad personal credit. Literally, we've done maybe 4 or 5 loans for people with less than a 500 credit score. So when I say we won't be disqualified, you won't be disqualified, but we will look at it. And that comes down to pricing, right? If you're high risk like that, people are going to pay more. LTVs on this program are lower than some of the other things in the industry because we're more aggressive on credit than, so it's always a balance, right? Generally, you're looking at a max of 55% on commercial or 65% on residential, but you're often going to see less than that, especially if somebody's coming in with a 478. Literally, the last funding we did was a 478 FICO. You're going to have a higher rate and a lower LTV. But because we have that flexibility, we can help a lot of people that otherwise wouldn't be helped.
So on the flip side, if they don't own the property at this point in time, they have to connect the dots. So if we loan up to 65% for a residential property, they got to be bringing 35% to the table.
35, really 40%. You know what I mean? Just think like the max is 65 in the right scenario. We have done up to 70 before, but the realistic max is 65. Probably somebody's going to be a little bit less than that. So I'm seeing a lot of deals at 50% on commercial and 60% on residential. All right, so how to apply? It's pretty straightforward. We have an application. Once you're a member office, you'll get access to all our apps. Get a full application. Sometimes you get a 1003 if it's a residential property. We need the app signed and filled out, please. Pictures of the property, and if it's an income-producing property, turn in the income statements. And then we'll get you an answer, usually within a day.
So as a member office, you have a customized CRM. You're submitting directly to the underwriting division. So you attach everything, click a button, and it sends it directly to the division. Any updates or reviews get electronically notified. So very seamless, transparent process.
Right. Over the last year and a half, I've looked. Our average deal is just under $500K, and the payout to the offices is 2 points. So that's a $10,000 average commission, which makes it pretty easy to sign up with us.
Right.
Like I said, we're doing a lot of these deals, so might as well be your deal. Crystal's saying, what do they allow for the down payment? Can they do seller carrybacks or seconds? Another great question. I know, Crystal, I remember you. I know you have a background in real estate. So we do not do second position ever. I mean, the only exception is a couple times we've done a second position just to cover our fees, but it's got to be a first mortgage. So that's on one side. But we do allow seller carrybacks to be considered a part of the down payment. Right? So to give an extreme example, not normal, but an extreme example, we had a client purchasing $1 million property, but he was able to buy it for $500,000. And in that circumstance, the borrower was able to get 100% financing for the cost because it was still a 50% loan to value. So it doesn't happen all the time, but that can happen.
All right, we have our business term loan division, so we kind of incorporated multiple products, SBA, term loan, line of credit, but the lowest rates, best terms in the industry. So this is something everyone's always asking about. And for years, we kind of shied away because it's just so hard.
It's tough.
It's tough, very tough.
There's
to
a lot
qualify.
of landmines. You got to be able to see around the landmines or you're done.
So we basically work from as low as from 25,000 up to 5 million. So we do have a very short pre-qualified process. So 48 hours, we'll look at all the details and come back and say this is a possible solution or not. So funding could range from, I like to say, between 8 to 12 weeks. So
it's going to depend on the client scenario, right? If they have to move into a new place and get an occupancy permit before they can get funding, which happens sometimes, it could be 6 to 12 months, right? Or if you come in with everything done, it can fund in less than a month. So,
but people will wait. They get rates as low as 6%, terms from 2 to 10 years. So these are all things people are attracted to. So we're working for free. We're analyzing a scenario and then giving clarity at no cost. Because it's a two-phase process. The first phase is analyzing, making sure there is a possible solution, and then once we do take on as a client, doing all the hard work on the back end with the fulfillment.
Yeah, so when you come in, you're going to have a universal application is what we call. This works for all programs. That's what's needed for term loans. It's going to ask for business information, personal financial statement. It's about 3 pages long. And the client's going to need to turn that in along with tax returns for the business if they already have one, or their personal tax returns if they don't, along with P&Ls. We'll do a full analysis. We may have to go back and ask for additional things, but generally we're going to be looking at the cash flow of the business and credit and let you know if they qualify. We still have some questions coming in on CRE, so I'm going to go ahead and answer that. Crystal's asking, what do they allow for the down payment? No, we already answered that. Does your investor do appraisals? We do require appraisals on almost all properties. All right, here's somebody else asking, I'm brand new to the industry, would be interested in speaking with you. Oh, great, well, let us know. Go to Finance Agents, sign up as an agent, and we'll be happy to talk to you after the show. All right, what else about the term loans? We forgot to do examples. So tell me an example of a term loan client that you funded.
Term loan would be just, I guess, recently, it was someone trying to open up their daycare in Atlanta, Georgia. And so it was a process where they didn't qualify for unsecured business finance, but they brought on their...
That means their personal credit wasn't high enough.
Personal credit wasn't high enough, so they brought on their boyfriend, and who has the credit. He's a basketball player, and so we navigated the waters, and it took a couple months to
basketball player in Turkey.
In Turkey.
Player abroad. That was very interesting.
So it was a $350,000 SBA to help her, grow out her childcare business.
Great. All right. Well, ring the bell.
Yeah, ring the bell. Good job, Rhoda.
That was a term loan. That was a tough one. Awesome. Okay. Let's see. We can skip over all this stuff. It's going a little bit long. Okay. As far as revenue, generally there's going to be a contract price for someone we help to get a term loan, and usually there's points from the lender. And so for an example, I think the next page has a better example. Why don't you pull up the examples so everybody can see. So if you brought us a client that got $1 million funding, which is, that sounds like an SBA loan typically, you're going to get a flat fee plus up to 2%. Generally, you're looking at about an $8,000 commission to you. That's what you would earn if you bring us somebody, and then we work with them for 6 months.
Right.
So we definitely earn our money on that program. All right, next, revenue-based advances. Why don't you talk about revenue-based advances a bit?
We call it RBA, so Revenue-Based Advance Program. Basically, this is a program for existing businesses. Businesses have cash flow. It's very
cash is key on this
key.
particular program.
Industry is very important, so lenders like to see a location, a brick and mortar building. So it's good for the medical, restaurant, retail industries. It's bad for consultants like us.
Right.
Bad for if you can pick up your business and move to a different state overnight. So typical terms, they're short, 6 to 12 months. There is no interest rate. There's more of a factor because this is a short-term advance. So with us, making sure it's the right fit, it's all about return on investment. We'll use the money for, and how it's going to help the bottom line. So this is by far the quickest program that there is out there. So this is great for people looking to make payroll, or they have to buy inventory or marketing to beat a deadline. So these are the things our consultants we train on to see if this is the right solution for the client.
Right, like if it's less than a $50,000 funding, it can fund in as little as a day or two. If it's over 50, usually you have to do a site inspection that makes it take a little bit longer. But a week to 2 weeks for $100K funding, I mean, that happens, sometimes in a couple days.
So oftentimes we're talking to someone who doesn't have the best personal credit in the world. They have an existing business, they have revenue. This is the target program. So credit's not really, it is a factor, but much lower, 525 range instead of the higher it would be for more traditional funding.
By the way, on the term loans, we literally had a signing in our office this morning.
Yeah.
I can't tell you about the client,
Right.
but I think somebody's buying a restaurant. Anyway, yeah, so the revenue advances anywhere from $5,000 to $2 million is the range, but I sure don't see that. I mean, we see some on the lower end, but generally we're not helping people get less than $10,000 funding, and most of the time it's in the $50,000 to $75,000, $100,000 range.
Just a couple days ago, we had a funding for $25,000. $25,000. We got a pre-approval for $35,000, but it's a trucking business on the East Coast, and they need repairs of one truck and then pay for the licensing of the other truck. So this will allow them to get their trucks back on the road. So it's imperative to keep the business afloat.
Daily payments. That's one of the keys on this program, is that the borrower is going to be making daily payments on the loan. It sometimes is weird for people to wrap their brain around, but statistically they're more likely to pay the loan back if they pay daily. So if they give any pushback,
is that every day?
Every day of the, well, it depends. Okay. If it's a merchant cash advance, it's every day they batch their merchant terminal, which might mean every day. Or if it's a ACH loan, then it's the business days. And how to apply, we have a short app. We just need a short app plus 4 months bank statements and merchant processing statements if you have them. But the commissions are great. You can make anywhere up to sometimes 15% of funding, but you really don't see that as much anymore because the market is contracting a bit. Generally, I'm seeing people get from 4 to 8 points on a deal, right? That's right. What we're seeing. So we have an example here of a working capital loan, 100K. If you got 10 points, you're going to get 10 grand for one single loan. I think the biggest commission we ever saw on one of these, we had a $30,000 on one particular deal that Kelly closed. I remember that one. That's our biggest. All right, equipment finance.
Awesome. Love it.
What do you want to say about that?
Equipment finance is one of those programs, it's really all about what they're going for, the type of equipment. So
very specifically, you need to know exactly, literally the serial number on the piece of equipment they're buying.
So you have to see if they're a serious potential candidate, they have to actually have the invoices of the equipment they're looking at.
Right.
Credit is a factor, so depends upon if they're a startup or existing. And so it's all about the type of collateral. It's good for things that are heavy, like tractors, transportation vehicles.
Yellow iron.
Bad for ATM machines. Things can disappear.
Vending machines, right.
So it's a great program. Fixed monthly payments. It works from ranges from $5,000 to $5 million. It helps preserve operating capital, and there's no large upfront fees. So this is a question every consultant should be asking when someone says they need $100,000. Well, what's it for? Let's break it down. How much is that equipment? So we do an internal review, which we'll go about here in a second. But at the end of the day, it helps preserve capital. This is great for working relationships, franchise relationships. They want to have that preferred provider for equipment financing.
Yeah, because a lot of people come in looking for a term loan or working capital, and they say, I need 100 grand in working capital. What do you need it for? 50 grand of that is for equipment. I say, well, unfortunately, you only qualify for 50 grand in working capital, but we can finance your equipment separately. And then they end up getting the whole 100 grand. So that's why he's talking about always asking what the money is for. And that can go for soft costs, that can go for lighting, that can go for signage, it can go for all sorts of stuff. It's not just the typical things you think of
We have a lot
as
of
equipment.
A lot of franchise relationships like Juice It Up, Fit Republic, Tap Out. Those are all franchises that have a need for equipment financing for their concept buyers.
Right, a lot of equipment in a gym.
There you go.
Right. Okay, so we got a short app works for the equipment along with equipment quotes. Like I said, it's got to be the exact quote. You give it to us, and within a day, we'll give you an answer. We could do an instant pre-qual and let somebody know generally if somebody's going to qualify. And then after that, it's kind of like a term loan. Sometimes it's short, sometimes it's long. It really depends on the client's scenario. So I think we have an example that Darren's going to put up here in a second once he clicks through all these. All right, so you bring in somebody who gets a $50,000 lease. So imagine like a tow truck, right? Like a brand new tow truck could cost 50 grand. The points on that, generally you're going to earn points on the funding, anywhere from 2 to 8% of the funding. So 5 points is 5% of the funding. So if you brought in one of those, it'd be $2,500. A single commission. You help guys. I got towed the other day, and the tow truck was asking me to get financing for a new tow truck. That's why I thought of that one. So real examples from our life. What's the last equipment deal that you did?
Last equipment deal was
one of those franchises, right?
for Juice It Up,
Juice It Up?
down at Temecula.
And they have like refrigerators,
kitchen equipment. So usually franchises will have the exact list of equipment items that are needed for a new concept.
Right. Okay. All right. And then last but not least on the funding program, BDRA, we've already talked about it a lot, so we won't go into too much detail. But in general, you have money in a 401k and you're not working there anymore. That's a requirement. You can use the money to finance your own business. You basically create a new 401k in your new business, you roll the money over, and then invest in the business. The 401k buys stock in your company. That puts money in your company that you can use for business purposes, and you put it back in the 401k later once your business is growing. It's the cheapest, best way to start up your business because instead of paying somebody else for your own money, you're paying yourself, right? Invest in yourself rather than investing in the market. No tax penalties, no taxable distribution. It's a great way to go.
And you're able to offer this to your employees, so it's a great way of attracting better staff.
All right. What's the last retirement rollover you did?
Working on one right now. It's someone who's trying to buy the restaurant from the owners that he's very close to up in Oregon.
Okay.
And so they're asking for a investment of like $180,000, but he doesn't qualify for business term loan division because of credit, but he has about $80,000 in retirement assets. So the owners are going to work with him as far as using the retirement assets as an initial down payment, and then over the next 2 or 3 years pay off the rest with the restaurant.
That's a whole other sale point. If you have a business, make a 401k so that your employees start earning revenue. Maybe someday you're going to sell your business to your own staff.
There you go.
Right? All right. So this is a flat commission. You maybe earn a little bit less than some of the other programs because it's a relatively inexpensive program. But if you sign somebody up for a retirement rollover, there's a couple different pricing options, but typically they're looking at a $1,500 commission. It will be on the next slide. We're moving on. $1,500. That's a flat fee. There are some exceptions or discounts or whatever, but in general, it's a $1,500 commission when you sign somebody
So the biggest questions I get would be, and this is very similar to BTL. Oh, not really. But this is a flat commission. Very different, because it doesn't matter how much they roll over.
Right.
If it's $100,000, $500,000. But at the end of the day, what we're looking for is at least $50,000 in the retirement assets, in the retirement plan. If you only have $10,000, $20,000, there's really diminishing benefit. It doesn't really make sense to bring them on as a client.
All right, so we're not going to go into a lot of detail on these programs because they are in development, but just sort of shoot it out there so you guys know that we're working on it. We have a fix and flip program that's in beta. We've already had our first fundings. We have over $3.5 million in the pipeline right now, and we're looking to do a full rollout of that soon. So we've already had some good success, and I imagine we're going to be talking about that a lot more soon. So fix and flip is something we're working on. Land loans are, if you've done real estate, you know that land is much harder to finance than normal commercial real estate because it's the most volatile type of real estate asset. So we're also working on that internally, plus factoring. And factoring isn't necessarily that hard. We just don't get a lot of that kind of business. But we do have connections on all of those. Now, non-funding programs. Why don't you talk about the different non-funding programs?
Well, my favorite's credit repair. So it's a great way of getting someone back in position to be able to be fundable. The two biggest reasons why people go through credit repair would be one, to buy a house, or to get business funding. So
Right.
a lot of people aren't going to be in place to be able to be presented to the lenders. So got to take with step one and proceed from there.
We get a lot of people coming to us that say, I want money, but I have bad credit, I don't have any contact, I don't have any assets. And frankly, the only thing they can do is go work on themselves first. Keep building their business without funding and work on themselves. Improve the scenario and we can get you back into the funding pipeline. Besides that, we have merchant processing. There's something else that we're going to be doing a full launch of soon that's in private beta. Very exciting. If you've sold merchant processing before, then you know it's a very competitive marketplace. Our new service offering, I think we even have a screenshot of the website next, it really breaks the mold. So never pay merchant processing fees again. Seriously, if you can't sell that, can't sell anything, honestly. So it's a good program, and I'm looking forward to rolling that out soon. CredNext is our credit report correction partner, not credit repair. It's more than credit repair. Put it on there as credit repair anyway, but also a good service. And ADP Rebate is our payroll service. That's a partnership we have between us and ADP, the largest payroll processor in the world. And our special partnership enables someone to sign up, get a rebate on their processing fees when they invite other people, and then those people
They'll meet
give
Jenny,
a rebate,
Tina,
get a rebate.
Allison, all right there.
All right. So that's all our programs. So we're happy to answer more questions. Before we move into the questions, though, the next 3 episodes this week, tomorrow we're going to return and talk about the platform. And what that means is the technology. We're going to be talking about the CRM, which is our lead management system, the affiliate marketing system, the learning management system, which we'll go into more detail on Thursday. But all the different technology, the online applications, everything that we do to support our member offices, the tools that a big company can use are available to our small partners, right? So we're going to be talking about that tomorrow. Thursday, we'll go into training. We do a lot of training here because to really succeed as an office, first you got to learn a bunch of stuff, and then you need to take on the mindset of perpetual learning, right? You're always learning something new on every deal. We'll talk about that on Thursday. And then Friday, personalization may not sound important, but it's one of the most important parts of what we do. So we help people structure individual sales and funding offices that aren't directly competing with everybody else in the marketplace. Super critical. We're going to talk about the different ways that we do that on Friday. So that's this week. And then next week, if you come back, we have 4 bonus interviews. We're going to be interviewing different member offices. So Tuesday of next week, we're going to interview Steve Hoffman, owner of office number 100, the 100th office that signed up with us.
There you go. 100.
100. We're still working on the next interview, and then Thursday is going to be Centex Funding, a member office that signed up about a month ago. So you get to hear somebody who's brand new, somebody who's about a month through the training, and then we're going to wrap it up with Prestige, one of our longest running member office, somebody we worked with for literally 5 years, maybe more, and somebody who's done tons of funding. So you'll be able to get the whole range of different experiences that our offices have had. So now, if anybody else has any more funding questions about the programs, I know we answered a bunch, but we'd be happy to answer more. Feel free to just type them into the chat box. If you are new to the show, then we're at youtube.com/financeagents. We say subscribe, and you'll get notifications every time we do a new episode. Like I said, we're doing live streams every day this week and next week. And then after that, we'll probably just go back to the normal Wednesday show. Anything else you want to say?
So one of the things I would say that some people ask a lot is, do I have to be a professional at all these programs as a member office? And at some point, you may get there, but it's a huge learning curve. So we do offer that support and that training, and so you can be able to present as a possible solution. And sometimes you're piecing things together. One client turns into 3 contracts.
Often you're going to be really good at 1, 2, or 3 products, right? It's going to depend on the industry that you're targeting, the kind of clients you're getting. So often it's just going to be a few that you're really good at, and then that's where we give a lot of benefit, is that we're here to support you on all the other ones. So at the headquarters, we have to know everything, but you are going to know your market and the things. So like if you're marketing to people doing fix and flip, you're going to be good on fix and flip, good on CRE, and maybe the credit card program. You know, everybody is a little bit different. That's some of the personalization that I talked about we're going to be talking about on Friday. All right, well, good. Let's go ahead and wrap it up. We don't have any more questions. Thanks, everybody, for coming on. We appreciate everything you do. We look forward to doing a lot more deals together. See you tomorrow.
Have a great weekend.
All right.